more deeply.
Right. Let's go to just some of the more popular sayings that we find. The one I always like, former U.S. ambassador to India, great economist, some great books on the stock market. He says, never confuse genius with the bull market. Ajit?
Absolutely true. And I think that what happened between 2005 and 2007 was that the whole world was born with geniuses. And actually they were not geniuses, they were fools, they were silly people, they were gamblers.
There was a rising tide.
They paid a lot of money across that rising tide. And then the markets proved in 2008 that they were not geniuses.
And who's the boss?
Absolutely, it was bad.
You're absolutely. I mean, I've always seen that when money making becomes very easy, you have to pinch yourself.
When the panwala gives you a tip, is it time to just take money out from the market and walk away, Ajit?
Absolutely. When the panwala gives you the tip, when my father starts telling me how I should be managing money, then I know it's time to move out. Definitely.
Have you done that? Have you ever been able to walk out from a market at the peak?
Yes. We've been very disciplined. We don't understand peaks. We never really got the top or the bottom, but we've been very clear because of the disciplined research investment process that we have as long-term value investors. We were big buyers of stock after Lehman. Big buyers. Our cash levels fell to the lowest in history. We were 1% cash in the portfolio. And now at this point in time, we're close to 18 to 20% cash. Because we're seeing the markets going up, and investing valuations going away, and the euphoria is about to come. Right. So, we may be early, and that's fine, but we want to be safe.
Bill Miller, another great fund manager, said, if it's in the newspapers, it's in the price. You are?
Absolutely. The market rewards you only for mispriced stocks.
Example in your life.
Something like say Titan or is an example, right, where you knew that there is a huge grey market out there and there's a huge demand for watches.
Latent demand.
There's a latent demand. So you really need a quality for a product with probably the Tata brand, and then that market can be tapped. So therefore, and of course the management was not in question because it was the Tatas. So therefore that was something that in fact I bought very early. In the 20s, when it was about 20 rupees, I bought it.
Penny stock, practically.
Fantastic it was.
Ajit, there's one by Phil Carrot which I really like. A period of prosperity contains the seed of its own destruction. Bull markets don't go on forever?
There's only been one sort of bull market for centuries, and that's gold, in some sense, but it's gone through enough cycles of its own sort of bear markets. But it's the only currency that has existed since time immemorial.
Right, and the quantum is fairly limited. What's your favorite market maxim of all times?
At the time when I was working with Mr. Ashok Birla many years ago, he put me in touch with a gentleman in the UK who was at that time a small, I guess, investment management firm. And I don't remember the gentleman's name, but he told me something which is stuck in my head for a long time. And it was, if you shake someone's hand and you don't get 5 fingers back, don't shake their hands again.
Have you applied that in life sometimes?
There are some very large companies in this country which are market favorites, and we were big buyers of their stocks in the days when I was local partner for this Jardine Fleming funds. They were the top 3 holdings in our portfolio, but they did things that we did not like.
Bad corporate governance,
not sharing with minorities, and our view was that no matter how big they get, no matter how much of a market cap of the entire index or of the country's GDP they occupy, if they're not willing to share with minorities for the same risk that we're taking as them, we should get the same kind of return, if you will. But if they don't believe that, then we don't want to be investors.
So you truly believe that when you invest in a stock, you're buying a part of the business?
Absolutely. We're taking the same risk as the founder. The day the founder has IPO'd, his money and our money takes the same risk and deserves the same rate of return.
You are?
Yeah, that was this one which says that for every problem there is a solution that is neat, plausible, and wrong. And the example is, way back, probably the 80s, you had this leasing boom. Every other firm was coming with a leasing
company.
Absolutely,
this is the early 80s of the last street.
Absolutely. So if you had followed this, everybody was saying that this is going to be lasting forever. And the whole sort of success of that boom was based on under-providing depreciation. So therefore, if you don't provide for depreciation, I think every company can make a hell of a lot of money. So that was the basis on which whole market cap was built. So therefore, this came unstuck pretty soon.
Right, but when they talk about leasing boom, there's always some scam going on the street.
Yes, absolutely. So you need to be very careful about that, whether this smells like a scam. So, and say for example, even today, the way emerging markets really galloping, it looks like as if the market has taken a view that India is completely insulated from what happens elsewhere in the world. India is destined to grow at whatever double-digit growth forever, and whatever happens in the US or Europe doesn't matter to us. And of course, every time the market goes up, we seem to be emboldened by this.
You mean we are not an island to ourselves?
Not at all an island to ourselves. We are going to be influenced by what happens there. So, and I think all this will probably come to a sorry pass sometime.
Yeah. Gentlemen, thank you very much for appearing on RD360.
Pleasure.
We will be back next week with another episode of RD360 Money Making Maxims.